right, so let's look at a technical top down here on US dollar SEK, which I haven't been trading in a while, actually. Well, because I have not, there's no, I don't usually have them both at the same time if I can avoid it. So that's popping up into a value trade area where there's going to be a lot of pressure. We have the trend up, the crossover, the pullback down, and now we don't quite get a higher high, but we do get signs that whatever pressure south is stalling and a little bit of indecision. So that's a hard call for a bias there. This can potentially still give us a higher high and give us a bull trend. So we're looking bullish on the 1 hour. We're looking very neutral to slightly bearish, despite price being above the investor trend line. It's still, like I said, didn't get us a higher high, has a little bit of resistance and choppiness there. And that could just be another excuse to take this down if we continue to see some US dollar weakness through, maybe some of the speeches this week or any of the macro coming in next week. So that's kind of neutral. The daily is kind of neutral as well. It's not in a spot where I would feel a big urge to buy. This resistance level is not as attractive anymore, seeing that it broke once, broke twice, without much effort. So I'm looking at, potentially thinking technically short if we can get into a key fib level 61 and above on the daily. That could be a technical short. And technical longs would have to be on the lower time frames. So, for example, the H4 would have to break those highs and come back down for me to start thinking long, or it would have to come back down to these lows, but we're far off from them, so I'm not considering that. And the H1, this buy formation here eats up the entire move, so it's really not. So it's kind of like a no-go for longs. And if I were to take another one, I wouldn't necessarily take a dip here, because if we don't get a higher high, then we got a sign of a stall of whatever move was moving this. Yeah. So from a technical perspective, I would like this to pop and then come down, right? Pop out a little bit higher, give me a higher high, and then come down for a buy down here. So very neutral-ish for me, SEK today. Yep. From a sentiment perspective, again, it's moving up based on the dollar mostly from what I can see, and not the actual health of the Swedish krona does not appear to have much of an effect on this. And this looks a bit like, the Dixie, right? With the rally here and the dip right here, and then a couple of days up like the Dixie, same exact, almost 100% correlated. So again, the dollar's health and the dollar monitoring would be your sentiment read for US dollar SEK. Any questions on it? Does that make sense? So kind of neutral technically, so it makes it tough to do anything with this. From a swing perspective, also hard to tell, because again, the buy is down here and we're like 1,500 pips late. So things are kind of in flux until we reach a key resistance level that can be sold or a key support level that can be bought. I would stay neutral on that one. And from a sentiment perspective, I would have the same sentiment as with the dollar. So overall, I would expect, the dollar to, if it continues to be pressured into the permanent pause and the initial, pricing enough cuts, then I would expect this to drop. But again, nobody knows, and the market is in the same ship as the Fed. The Fed tells us that they don't know, that they need to look at the data and the meetings are live. Well, the market doesn't know any more than the Fed does, and reacts accordingly with indecision. But we'll see again from a technical perspective, so we can have some confluence for trades. It's still a bit off. Let's look at the NOK. The NOK I am in short, and I probably should have washed down here, but the NOK is not. It's a middle of the road type of drawdown for me, and it's acting as a hedge. It's one of my US dollar shorts, right? So, I decided to stick with it, and you can watch the video from the London session for more details. From a fresh perspective, the weekly has a reaction at the river. The daily has a couple of days up, which corresponds with a little bit of the dollar strength. We also have a semi-correlated move between the strength dollar and strength weakness waves that we've seen. Here, it might be exacerbated, the drop a little bit more, because oil pulled up significantly from the lows. And obviously, we made money with that as well. But in the case of the NOK, it probably held the NOK, gained more ground over the US dollar than maybe the Swedish krona did. So we've got that deeper move here. Same thing I'm going to say. This is the spot to go long if you're looking for technicals. This one was a spot to go long if you were looking for technicals as well. And we're back up into that level. That broke again and actually hit a support level and reacted. But from a fib perspective, for mean reversion trades that you want to take short on pops, you're way off, right? You're not going to do it at least until up there, which would correspond with these highs here and that little flip zone there. These highs here, even maybe for an early, super early entry short. So shorts are not in the cards at the day level, I don't think. Longs, let's see. We're at a short position here on the H4. Yes, we have popped deep into the investor trend line, but we have not broken the highs, so we don't have a stall sign yet. This is still a valid, like we saw earlier, a valid short from a value trade perspective. But again, looking at it from the daily, it's an early short, and you would have to see. You would have to have that bias of US dollar short, right, to be happy with that short at that point. And it would be a 4-hour one, because you wouldn't get any short signals really coming from the daily. So 4-hour short, again, no setup, no proper drive into the level with a good sell bar. Maybe this one was one, but you've got two signs of pressure here. So I would call the daily kind of neutral to long. The H4 would be short for me until we break the MAs and these highs. The H1 looks long. We had the crossover. We have higher highs and still higher lows, barely, but higher lows. But we don't have, you're not at a buy position because, again, that's down here on the dips, and we've gone up about 400, 500 pips. So H1 long, H4 short, and daily long. It's hard to come up with a all-in bias. If I had to, I would have to look at the weekly. That's long. Now, like I said, looks a little bit long. That looks short. The H1 looks long. So if I had to take a position today on US dollar NOK, I would probably go long if I was forced to. And from a technical perspective, we've had some recovery, like I said, from NOK prices as oil has come off those lows. And oil has been sideways for a couple of days, and the asset has taken advantage to take to pop with the dollar, irregardless of oil stalling, where it has stalled, right here it's been here for 2 or 3 days. So in terms of a sentiment bias here, I would be looking at both. Again, we're not getting a lot of movement here based exclusively on the Norwegian krona. We do sometimes get it on key events, but for the most part, and though we have, do we have Norges Bank? I have to track those as well, I think, because it's a bit of a pain in the butt not having them on that chart that I've been creating to track this. Okay, let's see. Where did I put? Yes, so it's on Thursday, right? And it's expected to hike by 25 basis points. So we have a hawkish outlook towards the Norwegian krona from a macro perspective, just because monetary policy is being tightened, and there's a chance that we get a surprise 50 basis point hike and not only a 25 basis point hike. So you've got and then the general market sentiment, again, midterm really is the pressure of the dollar. So sentiment-wise, shorts would make more sense here than longs. So you have a divergence here between what would be an immediate long from a technical perspective, but we're getting a pullback, right? Which is what longer term traders use to get back in on the main trend or on the main, sentiment bias. And we're really there on the H4. We're not there on the daily, but we're there on the H4. The daily is, I guess, potentially going to give us a short there as well. Looking at a trend line, we have a break, right? When that 55 DMA broke, it did react at support, which was a decent long. But at this point here, you have an equal chance of this being the pullback that the dollar bears take advantage of to sell off. Yeah, it could very well be the case. So even though I have a 1 hour, bias long, I probably wouldn't go with anything heavy. I wouldn't really put too much on because everything points to there still being vulnerability to the downside. Any questions on the knock? None of these are giving like clear setups or clear trade ideas, really. And the knock, I'm still happy to be short. And I didn't wash, so I'm still confident that there's still a bit of pressure to come. And if there isn't, fantastic, because again, it doesn't really matter as this was built up as a hedge. All right, let's move on to the next one. Mexican, I'm only long at all levels. So that's going to be a quick one. We have a horrid drift. Yeah. The Banxico is on the line on Thursday. Oh, let me check again. I really have to track these better. Where's Banxico? Banxico, Thursday as well. Yes. Okay. So it's expected to do a second pause in a row, which means that we're getting close to that tipping point where I was expecting in an H2 or so, second half of 2023 to include some cuts or some speculation towards cuts, which could potentially even out, what has happened here and give us the pullback that I need in order to generate the gains that this darn asset owes me and get out. So from a sentiment position, mid to long term, I am long. Yeah. Short term, I got to go with, the US dollar driving this mostly. And for the most part, if the pressure remains on the US dollar and the market still wants the US dollar to tumble without a recession, so it wants it to tumble and give us a soft landing, and the market is positioned to prefer those outcomes and jump on those outcomes more than it would on anything positive dollar, then yes, it's clearly a bear. Yeah. From a technical perspective, it is a bear on the monthly, a bear on the weekly, a bear on the daily. It's a bear on the H4, and it is, still kind of bearish even on the H1. Yep. In the H1, we have a bit of a wedge happening here where I personally am hoping from a technical perspective, and, I'm not banking on it and I'm not changing any plans based on any type of hope, but I am hoping that this is the wedge that starts things moving north, right? That after 1, 2, 3, 4, 5, 6 legs on the H4, that we get a pullback, right? That after, what is this? 30 days, right? This is 20 trading days, so about a month, that we actually do get some reaction here. And if we get a pause out of Banxico, I'm just hoping we don't get a surprise hike, but if we get a pause out of Banxico on Thursday, and then we start seeing some of those odds go up for those cuts to be brought forward a little bit more as a result, then we could get something happening. But it needs to correlate, it needs to correspond, it needs to coincide with some US dollar strength. So it needs to coincide with the market, again, repricing some hawkishness that they have priced out after Powell's speech, despite the fact that Powell was signaling to a potential hike in July and had changed the dot plots and still had no cuts scheduled for this year. Yet the dollar still tumbled, yet the dovishness still prevailed, right? As a result of some of the comments that were thrown in there, which makes sense if the market will do what the market wants to do. But if the market decides that it's jumped on the gas a bit too early yet again, then we will see some US dollar strength. And if that corresponds with some dovishness from the peso, then we'll get the pop. But until then, this is clearly a bear sentiment wise, but I would just not encourage anybody to start selling down here. It makes no sense, and with no pullbacks or anything. So I cannot, in good conscience, say, okay, sell the crap out of US dollar Mexican. I'm warning everybody that this is ready at some point to give us a turn, probably closer rather than farther away in time, and that shorts should be done very measured on radical rips of price north for the asset. So you get a much better price here, and you're not stuck holding a bag, when the turn actually happens. And there's other stuff that you can trade that has less risk than this, to tell you the truth. Yep. But from a technical perspective, it's clearly oversold, and requires some sort of triage work happening for it to revive again. But it will, and I just have to wait. Yep. When I see price action that over a whole month I don't get anything other than a drip, I just have to forget it. I have to leave it on the side, not buy again. Watch my video because I explain my strategy, in a lot of detail for this particular asset. But in essence, I'm not buying it knowing that it's super bearish, right? I'm being very careful with my buys. I am reloading if I get a pop that I can take advantage of, and I'm being very strategic about where those buys are. But I'm not really aggressively buying this because I already have the bulk of my positions in, and I just need the move to happen. Yeah, and it's occupying the space of over 2 assets now in my portfolio, and instead of having maybe 15, 16 assets, I'm down to 14, 13, 14 on average. I now have 10 because, again, oil went off, and we had CAD yen come off, and we had GBP CAD come off, and GBP AUD came off, and what else came off? And, so I have space, but I have to be wary of how much drawdown US dollar Mexican occupies, right? So that I can maintain that balance and I don't overtrade. But that happens just automatically on every day I calculate and run the portfolio rebalance. I can clearly see that I need to make space for Mexican, or at least leave that space reserved. Any questions on Mexican? Is that clear as well? Okay, let's look at the ZAR. Did the Turkish lira recover a bit? I think it did. Let this load. It didn't really recover, it just stagnated. All right, so, and the US dollar ZAR, the ZAR took advantage and came back radically down from those all-time highs. Remember, we were talking about those. And it came back down crashing. It was not a situation where it was easy to call when that top was going to happen. I don't like calling tops anyway at extremes. So I didn't, I said, this is not looking good for the Rand, and I'm just not going to touch it. And then boom, down it goes and crashed on massive US dollar weakness and on US dollar weakness alone. Yeah. So whatever problems the ZAR was experiencing at this devaluation point still exist. Yeah, I haven't seen anything out of South Africa yet that points to any remedy to the issues that it's experiencing economically. So as soon as the US dollar wakes up again and gets another little bit of a rally, we should see a visit north. So here, because I am not bullish the ZAR from a macro perspective, mid to long term, it's hard for me to sell this. And technically, this is certainly not a short at the moment. Let's see. We're bullish monthly, we're bullish weekly, and at a value position on the weekly river for longs. The daily is looking bearish after the break of the 55 DMA, but it is still, if you look at the general trend of prices, still within a decent area in which buyers can come in and say, yeah, okay, that's a very, very deep, nice dip. It's still uptrending. I'm still going to buy it. Yeah. So the daily also looks kind of long despite its bear positioning, sub 55 DMA. And it's a radical dip into a bunch of congestion. So, this could be a reaction point. This could be a reaction point down here. Once this level breaks, then the technicals can certainly start pointing south. They will on the weekly, I think, and on the daily as well. But right now, this one is neutral to long on the daily. The H4 is bear as heck. but stalled for a few days now. But with no bear setup, no way to sell that. And the H1 has stalled and is going sideways. You want to see a higher high and a pullback that you can then buy with some sentiment accompanying positive bullish US dollar, and then maybe buy it there if you want to get in. Other than that, it's an at market long on the daily for a swing. It's an at market long on the H4 for a pop into the averages. And on the H1, you do need for it to rally and dip to get a better entry. But technically long and possibly long-term, mid to long-term sentiment long as well. And the only thing short potentially for a continuation of the pressure would be a break of this level here to the south side, and maybe a pop into there and a bunch of resistance. Yep, that's the ZAR. Any questions? It's always a matter of okay, so where's my technical bias? Where's my sentiment bias? Do they match? Yes, then that's easy. If they don't match, which one do I want to go with? It depends on how long you want the trade for, how much influence you have at that technical level that you're looking at. How confident are you on the technical side of things versus the sentiment side of things? Which one has more weight for you, etc.